Hello investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. If you're brand new to the Market Guys and this is one of the first times you've looked at our weekly market report, I want to explain that I leave the lines on my chart from the previous report so you can see how accurate the candle charts are. And right here is what I drew last week. I said that we would most likely move up early in the week, Monday and Tuesday, and then pull back to fill this gap. And you can see right here as I expand that for you with my magnifying glass, that is a gap. And 80% of the time, gaps fill. Now, the second part of the gap rule equation there is that once the gap fills, there's now an 80% chance that the stock will reverse and go the other way. Now, there's a lot of evidence here that supports that idea, and let me label that for you. Let me just condense my price axis there. You have 1, 2, 3, 4 red candles in a row, and this candle is known as a hammer pattern. A hammer pattern is a small body candle with a long shadow that's at least 2.5 to 3 times the length of the body, and that is bullish. So that's bullish sign number 1. Number 2, we see that as the price has been dropping, so has the volume been dropping, and that is a sign that the sellers are starting to lose some of that momentum. All right, so that's bullish. The other bullish sign we see down here is in the CCI, where you can see that it was moving lower and was starting to see this little hinge, which tells us that that momentum is starting to slow down. The stochastics is still going down, but the more sensitive indicator is the CCI. So what does that mean for next week? Well, being it's Thanksgiving next week, we will have a shortened trading week. So the volume will most likely be light, and we might see some of the professionals trying to push that market around. But I think we're going to not only go higher, but I think next week we're going to break into new highs. And that would be a high here from the high on Tuesday. I think we're going to go higher than that. We'll close higher than that. And that's what I'm expecting for the Qs. Now, if we look at the spiders, ticker symbol SPY, this is the S&P 500 ETF. You can see that I left my lines on the chart again. And boom, there you go. Spot on accurate. And I said we would move up Monday and Tuesday. We did that. Wednesday, we pulled back. We filled the gap on Wednesday. The low on Thursday touched that gap fill support level. And today we have another hammer, almost a doji, which is a sign of indecision on lower volume. CCI is all looking bullish right there. So I think the spiders as well are going to move up, and we're going to see higher territory with the end of my line right there being my target price. So we'll have to see if that pans out, and I think it will, but only time will tell. Now, if we look at the diamonds, this is the Dow Jones Industrial Average ETF, ticker symbol DIA. Again, I left my lines on the chart. I said we would move up Monday and Tuesday. We did. Pulled back. End of the line being my target price. We hit that on Wednesday. Thursday, we hovered around that. And today, we have a green candle and a more aggressive CCI as it moves up. And you can see this is a little bit different than the spiders and the Qs in that this green candle is starting to pivot up already. And we're seeing the volume start to increase on that green candle, which is telling us the buyers are starting to get a little bit more motivated. So again, like the other markets, I think we're going to break into new high territory, and I'm going to leave it just like that with the end of that line being my target, and I'll leave that in place for next week's market report. Now let's switch to the VIX. Now the VIX is a leading indicator, but it's also a contrarian indicator. I said we would most likely move up, and this line right here was my target price for the VIX. And look what happened. Just like that, we hit the target and pulled right back down. I'm going to erase all of these lines right now because what we're going to see most likely next week in the VIX is we're going to see lower prices. You see these long shadows? These are the vertical lines above the candle. Whenever you see long shadows like that, that's bearish. And so we have a support level right around here for the VIX. And remember, it's contrarian to the S&P 500. So if I'm bullish on the S&P 500, I'm going to be bearish on the VIX. And I think we're going to break down and break out below that support level at the end of the line right there being my target price. Notice the CCI is crossing the zero line or the momentum line. So chances are this CCI, and I'll even go so far as to forecast the CCI, I think the CCI will eventually drop just like that as well. Now let's look at a more broad-based index in the Russell 2000, ticker symbol RUT. This is the only one that didn't hit exactly like I said it would. I said we would break out over resistance. We did that on Tuesday. Wednesday, the high breached that resistance. But then we had a red candle and now a doji. So what does that mean? Well, again, weighing the evidence, we can see that there are more buy signals than sell signals. The 20-period moving average, which is this blue line, will most likely act as support. And that doji is usually a sign of indecision, like I said, but they are generally found at pivot points like I have seen back here. And if you look, there's a pivot point to the downside up here. See where all the dojis are. So I think the Russell 2000, like the other markets, are going to break out into new high territory with the end of that line being my target. And look at the CCI. It's a clear reversal from an oversold condition. We closed today with a buy signal right there. So if you are long any stocks or any of the ETFs that track the indices, or if you have any positions that are profitable right now, I would suggest you protect those profits and trail your stop up with the general market. Now finally, I'm going to look at the OUSE, which is a dividend high yield fund that is put together by Kevin O'Leary. I tracked this because it's a good cross-section of the markets, and I said that we would most likely pull back from this channel line. Isn't that interesting? It stayed within the channel. My forecast last week was that we would go to the upper channel line and then pull back, and that's exactly what happened, with the end of that line being my target. And lo and behold, what's happening? Let me erase these lines. You can see that the 20-period moving average, just like the Russell 2000, is acting like a support level. So I think this level of support will hold. OUSA will most likely run higher, and I believe it's going to break out into high territory as well, as the CCI is crossing back up over that zero line, showing momentum to the upside. I think we're going to have a pretty good shortened week as we approach the Thanksgiving holiday. And I do believe the year-end rally, also known as the Santa Claus rally, will most likely stay intact. So again, these are not guarantees. These are just my observations as I see the signals come up on the charts. I hope you follow along with the Market Guys. If you like, go to the Market Guys website and click on the video tab right there. That will bring you to a video library where I have explained a lot of what I've discussed here today. You might want to review Trading the Gap. You absolutely want to check out the 1% rule for managing risk. The role reversal is critical for your success if you're a trader. And if you want to learn about dojis and spinning tops, this video right here will serve you well. And all of these videos are very short, 7 to 8 minutes max. And we put that library together for the general public as our gift and showing value on the financial education side. So you have a great rest of the week, next week, and a happy Thanksgiving. And we'll talk to you next Friday. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.